Hello traders, Gary Wagner here. Approximately 11:30 in Honolulu, 5:30 in New York. It is Wednesday, the 13th day of June, 2012, and this is the daily report for gold and silver. We have the precious metals markets mixed today, with gold trading higher on the day, currently trading up about $8 in terms of cash, 16.14. If we look at the most active August contract of COMEX, that is currently at 16.19. And as I said, putting it up about $8 on the day, the low 16.06, high 16.26. Silver currently trading off about 11 cents on the day, 28.96. That is Kitco's price, 28.81 current screen price for the contract of July silver off of the COMEX, with a low of 28.67 and a high of 29.26. Traders, the first chart I want to take a look at today is going to be a daily chart. It is of August gold off the COMEX in Heikin-Ashi format. What I've done, I've added one simple Fibonacci retracement in which we are basically plotting the record top back last year of 1920 cash to the lowest point in the correction that we've had so far, which is right around 1520 in cash, 1531 in the August contract. Now, what I am finding interesting is when we plot the 23% retracement level, and then I'll explain why I'm looking at the 38% retracement level in just one second. But when we plot that, what we see is an area in which when the market came down, the first major dip that it had in the market, meaning when it went from 1920 down to this area here, which is just above the 1520. If you look at the real bodies of these Henkin candles, because a lot of times you will get the absolute intraday highs and intraday lows as being only there for a fleeting moment. And so I like to look at the bodies where it opens and closes. On Henkin, we are looking, of course, at the midpoint. But when we do that, we see that historically, we had some support in this area. Market came up, fell right through this support area here. But as you can see, as this market came down on this last corrective period, we had a series of days in which the market tested, but was unable to break through that low. So at this point, it is support. The support is broken, as you can see on this last run down, which happened just last month, end of May, beginning of June, say. And it also seems clear that we formed a very, very good base here, or bottom, which is why we've been talking about this basically a triple bottom in the market. We count this low here as being close to it. Now, the market did trade sideways for some time, but we've had a really nice rally in which the market's beginning to move itself back up. Notice where it is currently finding resistance at. It's finding resistance at that 23% level. Now, we did recommend initiating long positions in gold, and basis most active August contract, we're in roughly in this area, depending on where you got in, when you actually went and bought gold. My sentiment is that this resistance line obviously has to be breached before we see anything really happen. But once it is, our upside target for this current trade is going to be around 1685, and that is based upon this area of resistance right in here and support right in here. Now, traders, another reason on a technical basis I feel breaking above the $1,600 mark and then going for that mid to upper level $1,600 mark is so important, we need to really stand back and look at the big picture. When we look at the big picture, this is a daily chart, cash gold, Elliott wave count on there, and there was no doubt we broke through our very, very long-term standing trend line, the support line. And of course, the support line really began back in the end of 2008. Now, if the market is going to return to a bullish demeanor, it needs to, on a technical basis, move back into this channel and then to begin to plot again along these channel lines. The point in which it would be breaking above that channel also corresponds to the Fibonacci number we just talked about. Traders, you know, we have seen the precious metals markets rallying over the last few days. I believe it's been 4 days now, at least for gold, that we have seen a rise in the marketplace itself. And one of the big reasons for that has been this dramatic fall of the dollar as it barreled its way up to these new highs up around 84, as you can see here, based on an intraday high, 432-minute chart in Henkin Ashi format. Now, when we take this chart and we compress it so that we get a larger idea of where we are in the big picture, what you can see is as follows. This top that we have just seen, if we go over to a period in time in which we have had a similar top, and as you can see, this is back last year, you do get a matching top here on a technical basis, right in here, matches to this area here. And as we watch this market begin to drop, there are a couple of target areas we want to look at for the dollar on a technical basis, at least, finding some levels of support if it continues on this drop. And these are two areas that I believe will be fairly important, 81.50 and 79 on the dollar index. Lastly, silver. We are looking at our July contract of silver. It's trading 28.81. I still believe that we have some resistance that it will need to overcome. This is based upon the short-term Elliott wave study, the 61% level, and the level is really from the rally that took us to our secondary record top. The reason I say that is it did test $50 at one point when the Hunt brothers tried to take over the market. And we've also got another retracement running from this top to the low, just as we did in gold. And what that yields for us in terms of an interesting area to look at is this 29.94, and that's the $30 mark where we have found resistance once again right in here. When we take a look at this chart, it's quite easy to see that we are in fact getting resistance in this area. Here it was support. We'll have to see where this market wants to go. My sentiment is if we can see this market break above this resistance area at $30, our next stop is about $32, and it's based upon these series of lows that we got just after the market hit its record top of $50 per ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.